Welcome to Prep Pass. Here are 20 real personal lines insurance license practice questions with answers for 2026. Read each question, then try to answer before the 5-second timer runs out. For the full free practice test, just search preppass.org. Let's begin. Question 1. Coverage E on a standard HO3 excludes liability for watercraft above certain size and horsepower thresholds. An insured who owns a 20-foot powerboat with a 90-horsepower outboard motor will most appropriately A. Add a watercraft endorsement to the homeowner's policy or purchase a separate boat owner's policy to cover liability arising from the boat. B. Rely on the homeowner's policy as written because all watercraft are covered with no limits. C. Add an earthquake endorsement to cover the boat. D. Rely on personal auto liability, which always extends to boats. The correct answer is A. The HO Coverage E exclusion for watercraft removes liability coverage for boats above defined size/horsepower thresholds. The exact limits vary, but a 20-foot, 90-horsepower powerboat is typically excluded. The insured needs either a watercraft endorsement, where available, or, more commonly, a separate boat owner's or yacht policy that provides hull and liability coverage. Personal auto policies do not cover boats, and the earthquake endorsement is unrelated. Question 2. A landlord's tenant must move out for 3 months while fire damage to the rented house is repaired. Which DP coverage reimburses the landlord for the rent the tenant would have paid? A. Coverage B. Other structures. B. Coverage C. Personal property. C. Coverage E. Additional living expense. D. Coverage D. Fair rental value. The correct answer is D. Coverage D. Fair rental value reimburses the landlord for lost rental income when a covered loss makes the rented dwelling unfit to live in, for the time reasonably required to repair or replace it. Coverage E. Additional living expense pays extra costs the named insured incurs when displaced from a dwelling they themselves occupy, not the landlord's lost rent. Coverages B and C apply to other structures and personal property, not rental income. Question 3. As of January 1, 2026, what pre-licensing education must a California personal lines broker agent applicant complete before the license is issued? A. Only the 12-hour Ethics and California Insurance Code course. The per-line hours were repealed by AB 943. B. 20 hours of personal lines pre-licensing plus 12 hours of ethics. C. 52 hours total, the same as the full property and casualty license. D. No pre-licensing education of any kind. The correct answer is A. Effective January 1, 2026, AB 943 repealed California's per-line pre-licensing hour requirements for personal lines, and life, accident and health, property, and casualty. The only pre-licensing education still required before the license is issued is the 12-hour Ethics and California Insurance Code course from a CDI-approved provider. Continuing education, 24 hours per 2-year renewal, including 3 ethics hours, is separate and still applies. Question 4. Which statement about residential flood insurance is correct? A flood is a standard endorsement that any insurer can add to a homeowner's policy. B. The coverage A perils on an HO3 automatically include rising surface water. C. A flood coverage is generally written as a separate NFIP policy and typically has a 30-day waiting period before it takes effect. D. A flood policies have no waiting period and bind the same day the application is signed. The correct answer is C. Standard homeowners policies exclude flood. Flood is generally written as a separate policy through the National Flood Insurance Program, NFIP, or through private flood markets. NFIP policies typically have a 30-day waiting period from application/payment before coverage takes effect, with narrow exceptions, such as a loan closing requirement, so a homeowner cannot buy flood insurance the day a storm is forecast and expect coverage. Question 5. A landlord who rents out a single-family house on a DP3 asks whether theft losses to the dwelling are covered. Which statement is most accurate? A theft is not a covered peril unless the limited theft coverage endorsement is added, because the dwelling is non-owner occupied. B. A theft is automatically covered on DP3 because DP3 is open perils on the dwelling. C. Theft on a rental house is covered only under DP1, not DP3. D. A theft is automatically covered up to $5,000 with no endorsement required. The correct answer is that theft is not a base peril on any DP form. For an owner-occupied DP, the broad theft coverage endorsement can be added. For a non-owner-occupied, rental, dwelling, the limited theft coverage endorsement is used, with sub-limits on jewelry, firearms, silverware, and similar high-theft items. Even DP3's open perils language applies to the dwelling structure, not to theft of personal property, and there is no automatic theft coverage. Question 6. A landlord insured under a DP3 is sued by a tenant who slipped on a broken porch step. What does the base DP3 pay toward the landlord's liability defense? A. Up to the coverage limit of the dwelling. B. Nothing. The DP has no liability coverage in its base form. C. Up to $300,000 standard personal liability under coverage L. D. A 20% of coverage A for liability defense. The correct answer is B. The dwelling policy is a property-only contract. There is no Section 2 coverage, no personal liability, no medical payments, in the base DP3 or any other DP form. A landlord must add the personal liability supplement endorsement or carry a separate liability or umbrella policy to be protected against a slip-and-fall suit. Coverage A insures the building, not lawsuits, and there is no automatic $300,000 liability limit on a DP. Question 7. A DP3 dwelling has a replacement cost of $500,000. The landlord carries $300,000 of insurance and suffers a $60,000 partial loss with a $1,000 deductible. Using the co-insurance proportionate formula, what is the insurer's payment? A. $44,000. B. $59,000. C. $60,000. D. $36,000. The correct answer is A. The 80% co-insurance requirement means the insured should carry at least 0.80 times $500,000 equals $400,000. The owner carries only $300,000. Proportionate share equals $300,000/$400,000 times $60,000 equals $45,000 minus the $1,000 deductible equals $44,000. The insurer pays the greater of ACV or this proportionate share. Assuming ACV is similar or lower, the payment is $44,000. The missing portion is the co-insurance penalty for being underinsured. Question 8. California law generally treats diminished value, the loss in a vehicle's market value after a high-quality repair, under a first-party physical damage claim as A. Not recoverable as part of the insured's first-party collision claim against her own insurer. B. Always recoverable up to 30% of the pre-loss ACV. C. Recoverable only if the vehicle was less than 1 year old at the time of loss. D. Recoverable only against the insurer of the at-fault driver, never the insured's own insurer. The correct answer is A. Under California first-party property/auto principles, the insured's collision claim against her own insurer pays the cost of repair or actual cash value, and diminished value, the residual loss in resale value after repair, is generally not recoverable in that first-party claim. Diminished value may, in some circumstances, be pursued against the at-fault third party in tort, but not from the insured's own collision coverage. Question 9. Under Section 1861.02, in what priority order must a California auto insurer apply the three mandatory rating factors? A. Credit score, zip code, occupation. B. Annual mileage, driving safety record, years of experience. C. Driving safety record, annual mileage, years of driving experience. D. Years of experience, gender, vehicle type. The correct answer is C. Section 1861.02 lists the three mandatory factors in priority order. 1. The insured's driving safety record. 2. The number of miles driven annually. And 3. The number of years of driving experience. Optional factors such as territory or vehicle type may be used only with commissioner approval and never ahead of the three mandatory factors. Credit-based insurance scoring is not allowed on California personal auto policies. Question 10. A homeowner uses a DP3 to cover a vacation cabin she personally occupies 4 months each year. When a covered fire makes the cabin uninhabitable during her stay, which DP coverage reimburses her extra hotel and meal costs? A. Coverage D. Fair rental value. B. Coverage E. Additional living expense. C. Coverage C. Personal property. D. Coverage A. Dwelling. The correct answer is B. Coverage E. Additional living expense reimburses the named insured for the extra costs incurred while displaced from a dwelling they themselves occupy, including hotel, meals, and similar living expenses. Coverage E is standard on DP2 and DP3 but not on DP1. Coverage D pays for lost rental income, a landlord scenario, not the owner's personal living costs. Coverages A and C apply to the building and personal property. Question 11. A DP3 dwelling insured for $300,000, which equals 100% of its replacement cost, burns to the ground. The loss is total. Ignoring deductibles, what does the insurer pay? A. $240,000 because of the 80% coinsurance condition. B. A replacement cost minus depreciation. C. $300,000 minus the percentage of the dwelling's age. D. Up to $300,000, the full policy limit on a total loss. The correct answer is D. Coinsurance penalties apply to partial losses, not total losses. On a total loss, the policy limit is the maximum the insurer will pay. Here the limit is $300,000 and the insured was carrying insurance equal to 100% of replacement cost. The insurer pays up to the $300,000 policy limit, subject to deductible, which the question said to ignore. California's Insurance Code Section 2051 governs how total losses are valued. Question 12. Which of the following is a permissible optional rating factor for personal auto in California, used only after the three mandatory primary factors? A. Driving safety record. B. Type of vehicle, make and model. C. Annual miles driven. D. Years of driving experience. The correct answer is B. Under Insurance Code Section 1861.02 and 10 CCR Section 2632.5, the three mandatory primary rating factors, in order, are driving safety record, annual miles driven, and years of driving experience. Vehicle type / make / model is one of the permitted optional secondary factors that may be used only after the three primaries are given greatest weight. Prohibited factors include credit history and zip code as a standalone primary. Question 13. A landlord's DP3 rental house has been vacant for 75 consecutive days while between tenants. Vandals break in and spray paint the interior. How does the policy respond? A. Pays in full because vandalism is an open peril under DP3. B. Pays 1/2 of the loss as a vacancy coinsurance penalty. C. It pays nothing because vandalism losses are excluded after 60 days of vacancy. D. Pays only the cost of repainting walls, not personal property. The correct answer is C. Under the DP vacancy condition, once the dwelling has been vacant more than 60 consecutive days immediately before a loss, the insurer will not pay for losses caused by vandalism or malicious mischief, glass breakage, sprinkler leakage, water damage, or theft if endorsed. The 75-day vacancy crosses the 60-day threshold, so the vandalism loss is excluded. Some other perils such as fire would still be covered. Question 14. An auto broker tells a prospect that a competitor's company is about to go bankrupt even though there is no public evidence to support that statement. Under California law, this conduct is best described as which prohibited unfair practice? A. Twisting. B. Rebating. C. Defamation of an insurer. D. Boycott and intimidation. The correct answer is C. Section 790.03b of the Insurance Code prohibits making, publishing, or circulating any false or maliciously critical statement about an insurer that is intended to injure the company. That conduct is defamation of an insurer. Twisting involves misrepresentations made to induce a replacement. Rebating is sharing commission with the insured. Boycott/intimidation requires concerted action restraining trade. Question 15. Which of the following correctly distinguishes the dwelling policy from the homeowner's policy? A. The DP can be written when the dwelling is not owner-occupied. The HO requires owner occupancy. B. The DP automatically includes personal liability. The HO does not. C. The DP is limited to 2-unit dwellings. The HO can cover up to 6 units. D. The DP covers earthquake automatically. The HO excludes it. The correct answer is A. A key distinction is that the DP does not require owner occupancy and is therefore the standard policy for rental and seasonal dwellings, while a homeowner's policy requires the named insured to occupy the dwelling as a residence. The DP does not include personal liability automatically, that is the homeowner's policy. Both DP and HO are limited to 1 to 4 family residences, and both exclude earthquake. Question 16. Which statement about the California Low-Cost Automobile Insurance Program, CLCA, is true? A. Eligibility is based only on age, not income. B. CLCA pays for collision and comprehensive damage to the insured's vehicle. C. CLCA provides liability-only coverage and is statutorily deemed to meet financial responsibility despite lower limits than 30/60/15. D. Drivers under age 21 are the primary intended market for CLCA. The correct answer is C. CLCA, created under Insurance Code Section 11629.7 ET, is an income-eligible, good driver, liability-only program administered through the California Automobile Assigned Risk Plan, CARP. Its dollar limits are lower than the standard 30/60/15, but it is statutorily deemed to satisfy the financial responsibility requirement. Drivers must be at least 19. CLCA does not cover collision or comprehensive losses. Question 17. Which of the following is a duty owed by the insured to the insurer after an accident or loss, as required by Part E of the personal auto policy? A. Make payments to repair shops before notifying the insurer. B. File suit against the at-fault driver within 24 hours. C. Reject any offer of settlement made by the insurer. D. Promptly notify the insurer of the loss, cooperate with the investigation, and submit to examination under oath when required. The correct answer is D. Part E, duties after an accident or loss, requires the insured to 1. Promptly notify the insurer of how, when, and where the accident or loss happened, 2. Cooperate in the investigation, settlement, and defense of any claim, 3. Submit to examination under oath when required, and 4. Authorize the insurer to obtain medical and other records. Failure to perform these duties can void or limit coverage. Question 18. A homeowner in a brush-exposed canyon has been declined by 3 admitted carriers because of wildfire risk. Which California program is designed to serve as the insurer of last resort for this property? A. The California Earthquake Authority, CEA. B. The California Low-Cost Auto Program. C. The Department of Managed Health Care, DMHC. D. The California Fair Plan. The correct answer is D. The California Fair Plan, created at Insurance Code Section 10090 and following, is the basic form property insurer of last resort. It is a syndicate of all admitted property insurers and provides narrow fire coverage to applicants who cannot obtain coverage in the voluntary market. The CEA handles earthquake. The low-cost auto program covers liability for qualifying low-income drivers, and DMHC regulates HMOs. Question 19. A California homeowner buys a new admitted carrier homeowner's policy and is silent about the earthquake offer that accompanies the application. Under the mandatory earthquake insurance offer law, what is the result? A. Earthquake coverage is automatically added to the policy at the basic CEA limit. B. The insurer must phone the insured to obtain a verbal acceptance before the policy can issue. C. Silence is treated as a decline and no earthquake coverage is in force. D. The producer becomes personally liable for any earthquake loss. The correct answer is C. Under Insurance Code Section 10081 and Section 10086, the insurer must make a written offer of earthquake coverage at issuance and at every renewal of a residential property policy. The applicant may accept or decline in writing, and silence is treated as a decline. There is no automatic add-on, no verbal acceptance requirement, and no personal liability shifted to the producer when the insured does not respond. Question 20. An insurer chooses not to renew a personal homeowner's policy at its natural expiration. How many days before expiration must it mail written notice to the named insured under California law? A. 20 days. B. 30 days. C. 45 days. D. 75 days. The correct answer is D. Insurance Code Section 678 requires that a notice of non-renewal of a personal line's residential property policy be mailed to the named insured at least 75 days before the expiration date and state the specific reason. The shorter periods listed are timeframes that apply to other actions, such as a mid-term cancellation of an auto policy for non-payment, but do not satisfy Section 678 for property non-renewal. That's all 20 questions. Want the full insurance practice test with hundreds of questions, completely free? Just search preppass.org. Good luck on your exam.